Ahead of the opening bell, futures for the S&P 500, ES equal F, fell percent, or points, as of 8:39 a.m. ET. Dow futures, EM equal F, fell percent, or 279 points, while Nasdaq futures, NQ equal F, fell 1.4%, or 101.5 points. The new tariffs, which will begin at a rate of 5% starting June 10, were unveiled as a move by the Trump administration to try and pressure Mexico to crack down on Central American migrants attempting to cross the U.S. border. Trump said the tariffs will rise to 10% on July 1 if Mexico does not take sufficient action, and will increase by 5% each month thereafter to as much as 25% by October 1. The tariff will gradually increase until the illegal immigration problem is remedied, at which time the tariffs will be removed, Trump said in a Twitter post Thursday. The duties on Mexican imports will carry major implications for companies with operations south of the border, and particularly for U.S. automakers. Ahead of the opening bell, shares of Ford, F, dropped percent, while shares of General Motors, GM, slumped nearly 5%. U.S. trade with Mexico is all about cars. This would cripple the auto industry, Deutsche Bank's Torsten Slok told Newspulse Finance. It would bring car production to a halt pretty quickly. According to data cited by Slok, 35% of U.S. auto exports, from a value-added standpoint, are composed of parts manufactured in Mexico. This proportion has grown each year since the North American Free Trade Agreement, NAFTA, took effect in the mid-1990s. Imposing these tariffs broadens out the trade war between the U.S. and some of its major trade partners. Trump, a self-proclaimed tariff man, has continued to deploy additional levies on imports by trade partners as a preferred method of policy, despite the volatility such moves have stirred up in equity markets. The drop in the major U.S. indices Friday morning as market participants price in the impact of the additional duties looks about right when compared to the market reaction from previous tariff announcements, Neil Dutta, head of economics at Renaissance Macro Research, wrote in an email Friday. On average every 16 BN in tariffs, cuts about 1.5% off the S&P 500, Dutta said. 5% on $350 BN U.S. imports from Mexico works out to $1 in tariffs. So again, around 1.5% off in stocks. Markets look like they are going to open down 1.2%. In the ballpark. As of market close Thursday, the S&P 500 was down 1.3%, the Dow was down 1.6% and the Nasdaq was down just under 1% for the week as investors reacted to trade-related sparring between the U.S. and China, which have each threatened to impose additional tariffs. U.S. Treasuries resumed their rally, with yields down across the curve. The 10-year U.S. Treasury yield, TNX, dropped 4.8 basis points to %, recovering slightly after falling to as low as % earlier Friday morning. It held below the 3-month Treasury yield, which was down 1.5 basis points to % as of 8:40 a.m. ET. Emily McCormick is a reporter for Newspulse Finance. Follow her on Twitter, at Emily_MCCK. Follow Newspulse Finance on Twitter, Facebook, Instagram, Flipboard, LinkedIn, and Reddit.